Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is August 14th, 2012. Lots to talk about, so let's get started. All right, this is a chart of the SPY, which is the ETF that tracks the S&P 500. So let's take a quick look at what happened today. Today we closed 2 pennies up. However, we did gap up in the morning. That is what I was looking for. And you guys know how I feel about volume, and you guys know how I feel about my mathematically calculated levels and how well they've been working. They don't work all the time, just so far they've been working out pretty good, but like I said, anything can happen. But as of now, for today, let's take a look at what happened. So we essentially opened up higher, and then we kind of continued a little higher up, and then we started selling off. We came all the way down, and at the last minute we broke higher. And the last minute of the break higher could be multiple reasons. One reason being everybody covering their shorts, and the second reason is federal manipulation, which we've been seeing. And like I've been saying, it's just a normal thing that should be expected but never traded on, meaning I would not place a trade with the expectations that the federal government or the institutions will come in to manipulate the market, because that's just the fact of the matter is it's not 100% of the time, but you can just literally see it happening on the charts, and that's why we use charts to see the manipulation happen, and then we can make a trading decision based on that. In addition to that, like I said in the previous video, I'll do a recap a little later, but basically this week is the week that options expire. This is this coming Friday. The options expire. Actually, Saturday expires, but we can no longer trade or execute options after Friday. So that basically means that institutions are going to manipulate the market, and normally what you see is a lot of volatility, not necessarily volume. Okay, just keep that in mind. I mentioned that before. Volatility does not mean that you're going to have high volume. All of volatility means is you're going to see a lot of up and down in the intraday market before we actually come to a close. And so one way to find out is, first of all, let's just do a quick analysis on the daily, and then we'll go into the 10-minute chart to see what happened intraday. Okay, so what I'm gonna do right now is I'm gonna load the drawings that I've had. Let's see, drawings were made probably on this day here, which was August 3rd. For those of you who have always continued to watch my videos, you guys know how these mathematically calculated levels work here. I had one at 141.36 on this day here. So this was August 3rd. I also have a level of 141.88, and you guys know that this purple line here is still testing, and with the light volume there's a possibility. However, I don't think that we're gonna get there. And again, what I think, anytime I say I think something, doesn't mean it's gonna happen. When I say, okay, let me take a step back here. When I say I think something, it doesn't mean that that's what the charts are telling me. All it means is that's what I think. But when I say this is what the charts are telling me, then it's purely technical. So right now, the charts are telling me that there is a possibility that we can get to the 141.88, but with this 141.36 mathematically calculated level that you'll only find on my videos, because nobody else has this calculation to my knowledge. It's been holding up pretty well. Again, nothing's 100% guaranteed, so I don't want you guys to always think that just because I have a level, it's always going to bounce off of it. But as of late, meaning recently, well, not recently, ever since I discovered it, so far it's been working out pretty well, and that's last year, December is when I discovered it. Anyways, we also have this 142.78 level here, which is another pink line. The pink lines are the ones that have been working out. The purple lines are more of the test, because I'm trying to get better accuracy. Okay, so what I said basically here, okay, so this is the candle here, or this is the day here. On this day of August 7th is when I shorted the SPY by buying the SDS, because the SDS is 2 times short the SPY. Okay, so that's how I shorted the SPY. It wasn't a direct short, so I bought long SDS. Okay, so I did say until we get volume in the market, I mean, if you just look at the volume, it's just been demolished. Like ever since this candle here, it's just been down, 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 down. Okay. And you guys know, the people who always, who've been with these videos since day one know how important volume is to me, and without the volume, I cannot justify any type of reversal. Okay, so just looking at the charts today, we did gap up, and the cool thing is we gapped up right into this 141.36 mathematically calculated level with the high today of 141.38. So I was off by 2 cents. The calculation was off by 2 cents. Not bad. I mean, again, nothing's perfect, or at least that I know of. And then we just pulled back from there. Now, do I think this is a reversal? Well, here's a couple of things that I think. First of all, is this a reversal candle? No, it's not. It's not a hammer. It's not a shooting star. It's not a hanging man. It's nothing. It's absolutely nothing in my opinion. It's not even a it hasn't even gone down 50% of the day's candle below. Okay, but what? So I'm gonna give you the bearish scenario and the bullish scenario. First, let's start with the bearish scenario. Bearish, we hit this 141.36 level, which is a mathematically calculated level that has been working out, but I can never tell if it's going to be intraday resistance or support, or a swing type resistance or support. And like I be honest with all you guys, I'm not trying to sell you anything. I don't even make money off these videos, so I'll be honest, these levels aren't perfect. So sometimes I get intraday resistance, and sometimes I get resistance for days. So it really depends. But as of late, meaning since I've discovered it, it's either or. It's either so far it's had like a 95% success rate, where it's either bounced off of the daily, or bounced off the intraday. So in this case right now, intraday, at least for today, we went right into the 141.36 and we pulled back. So this means there is still a possibility we could pierce that tomorrow, because we have this upper trend line here that still exists, and we also have this 141.88, and this is also just a test mathematical calculations trying to get it refined. But as of now, this 141.36 has held up for excuse me, for today, which means that could be bearish. Another bearish sign is I spoke in previous videos that this could potentially be a bull flag, right? If it is a bull flag, it hasn't played out, meaning in my opinion it's failed. And if we don't have this bull flag drawn out scenario here, this is literally not considered a breakout. Okay, and that tells me that this line up here, and then now we have this up position here, this is not really a bull flag anymore. Okay, this is not a bull flag anymore. To me, it looks like just it's just been pushing up like it's been with because of the low volume. And I've been more bearish than I was bullish. If you watch my previous videos, that's how I was thinking, that this was not a bull flag, but more of a just a float higher. Now, it could be 100% totally up, totally 100% wrong. Okay, we'll look at the intraday soon enough. But like I said again, this is just what I'm thinking. It's not a recommendation for anything. It's just what I'm thinking. Another reason why this is kind of looking a little bit bearish is, if you see this candle here, the day I shorted it, we're still unable to close above this level here. Unable to close above it. Okay, so that's another bearish sign to me. And of course, we did pull back off of this 141.36, and the real question is, will this mathematical calculation hold? If it holds throughout the number of days to come, which is tomorrow, throughout this week, and most importantly, we get some volume behind it, then yeah, I think we're gonna see somewhat of a pullback, at least into this 20 moving average. Okay, so that's the bearishness. That's the bearish look. Another bearish sign is that we had today was 102 million, which is not nearly that. I mean, that's still under the average, which is 150 million. Okay, so again, volume is very important to me. But if you notice, okay, we did have, let's see, we had substantial volume here, which is on a doji candle. We do have substantial volume here, which is higher, and you guys all know volume needs to at least be 3 days higher than the previous 3 days. This day here was the next one that could be just as high, but it's only at 99 million, which means this with this volume here today, which is 102 million, although it wasn't very much at all to justify any type of reversal, okay, it was still higher than the previous 4 days. So that could mean something, in which that this could be somewhat of a reversal. Now, if we do reverse tomorrow, and it is on low volume or even lower volume, then I don't think the reversal is going to hold up. What I mean by that is we could potentially bounce off the 20 moving average before going higher. Now, if we do have higher volume tomorrow, we come down and we have volume, equivalent to this volume over here, then I do see continued downside, and possibly breaking down from this, bottom trend line here. So that's just to keep that in mind. Now, the bullish sentiment is right now, we are close to this double top here. We haven't really 100% cleared it, but if you look at the body of the candle here, we've basically broken out, and just landed right on this support line here, which means that we could get a bounce tomorrow to go even higher. Another bullish sentiment is that this could still be, even though I don't think it could still be a bull flag, and right now we broke out, but we're just retesting the upper resistance point, which is now support, in which case we could break out and go higher. So that's the bullishness. In addition to that, if we don't get volume in the markets, then I don't think these stocks are going to come down, and if the market still does sell off on low volume, then I don't think it's going to be long lived. All right, so that's the bullish. So of course I'm still going to be bearish, more bearish than I am bullish, and the reason too is, I need to really trust my levels here. I haven't been trusting these levels lately, but I really should, because these levels are actually holding up pretty well. Nobody that I can find actually had a level of 141.36. You can watch the previous videos, and I actually had this 141.36 level for the longest time. And even if we do go higher tomorrow, it doesn't really matter, because this 141.36 level did already hold on the intraday. Speaking of intraday, let's take a quick look at that. So again, the market manipulation based on low volume, I always, if you're new to these videos, if it sounds like I'm repeating myself over and over again, I apologize. But this is just in case, new people watch my videos. We do have market manipulation. I mean, it's obvious. Everybody knows about it. You have the ones who complain and blame it on manipulation, and you have the ones that accept the manipulation and trade based off of the knowledge that we do have market manipulation. And, that's where I stand right now, where the markets have been manipulated since the markets were open. It's just clearly stated now, or clearly recognized as of today, because our economy, is so bad, and we have so much inflation. Everybody's just taking more notice of the manipulation that's happening in the markets. I mean, we have, these two candles here. This candle was a 5.5 million buy-in, and this one was a 5.2 million buy-in, and on the very last 20 minutes of the market. Okay, these dotted lines here is the beginning of the day and the end of the day, and so on and so forth. Okay, so this was 2 days ago. Yesterday we had a volume of 2.2 million, and this one was 4.3 million on the last 20. Well, this one was 1.8 million. So the last half an hour of the market open, we just, we had a buy-in. I mean, people were buying, and when I say people, I mean institutions, I mean federal government, I mean, manipulation, basically, because the retail traders can't do this on their own. Okay, so today we gapped up, meaning we opened here, we went right into this 141.36 level. Okay, again, it's not magic. I don't want to take credit for it, simply because it's not me. I'm not guessing this 141.36. It's merely a mathematical calculation. I plug it in, and Excel spits out a number for me. I put it on, and it just so happens to bounce off of there, and it's been happening as of since December, so that's pretty cool. Anyways, we bounce off of there, we come all the way down into this close to gap fill here, right? But we didn't quite make it. Actually, this pivot point here was probably the support that we got the bounce off of. We never did retag this 141.36, and then we came back down, and then we had the same support, a bounce off the same support, and then we came back up, and then we just went all the way down and sold off into this 200 moving average. And at the last 10 minutes of the day, we got 6 million. The volume was 6 million on the last 10 minutes. Okay, and then we went from 141.61 to the low of, actually, so we opened at let's see, 140.61 at the low of 140.37, and then they bought it back in at the last 10 minutes of the high of 140.77. So this is definitely the manipulation here. Basically, what they're trying to do is they're trying to save the markets from falling. Okay, and they are able to do that simply because they can, because there's nobody selling out there. It's this is, I believe, is probably short covering and the federal manipulation combined, which gave this long candle here. As you can see, I mean, we did break down from the 200 moving average, but they obviously saved it to be above the 200 moving average, because as you can imagine, if we had a close below this 200 moving average, how many bears would start coming into the market and start selling off? And the reason why I say that is because the 200 moving average is the most common moving average that most people out there, including institutions, use. As a indicator for support and resistance. Okay, so now the Feds know that if we get a close below this 200 moving average, that's going to have a bearish signal, and a lot of people would probably start selling, and that's not what they want. Okay, they need to prop the markets higher, because if they don't prop the markets higher, then they believe that the people will stop buying and the economy will, um, come to a halt, if that's even what they're hoping for, because I don't know what's going to happen long term. In any case, to make a long story short, we do have manipulation here, and it does look more bearish than it does bullish, in my opinion. Now, what are the charts telling me? The charts are telling me that until volume comes back in the market, there is a possibility we may still float higher. I mean, I can't rule that out. I mean, that's still in the cards. I mean, again, I really should trust my calculations here, which is 141.36. It got the high of 141.38, so we should at least get a pullback. But again, it's hard to tell. Simply because the volume is just not here. Now, yes, granted, we did get more volume than the last previous day, so that could signal a definite reversal, at least into the 20 moving average here. But again, if we don't get major volume, meaning a major amount of volume in the markets, then we should get a bounce off the 20 moving average and possibly continue higher. So let's take a look at something else here. This is the daily chart of the VIX. I didn't do any real calculations off the VIX, but yeah, so we had this 1577 off the VIX on the day of 6/29. Again, a use and abuse level, whether it be a mathematical calculation or a pivot point or a gap fill. Once it's used, in my opinion, it's abused, and we don't need to look at it anymore. So I'm going to take that line out. I didn't do any more mathematical calculations on the VIX. I really should have. I do apologize. I will, for the next video, have the VIX with calculations on par. However, if you look at the VIX kind of had a spike today, which was a good sign, simply because fear, well, I wouldn't say good, but I'm saying good because I'm short the market, obviously. But there is fear coming back into the markets, and we're gonna get some support at the, we're probably gonna get some resistance here at this sorry, my lines are crooked, at this point here, which would coincide with the 20 moving average. But so we got some ways to go more on the VIX. But is the VIX as important? Yeah, the VIX is very important for short selling, simply because fear is the strongest of the three emotions, which is greed, hope, and fear. Fear is the strongest one. So if we can get a lot of fear in the markets, then obviously the markets are going to have a substantial pullback. Okay. Obviously, the big one is the US dollar. The dollar is everything, if the market's up, dollar's down, and if dollar's up, market's down, and vice versa, or whatever. I don't even know what I just said, but you guys know how the dollar is inverse to the markets, right? So let's do a quick analysis. I'm going to do a quick on the fly analysis on the dollar. I didn't do any mathematical calculations on the dollar. They don't seem to work out too well on the dollar, but I'll do it anyway. Anyways, we have this gap fill support line here. We came down, we bounced off with this gap fill. I mean, we actually broke down from it, but we were unable to close below it. We bounced off, we went right into these two moving averages here, and then we came back down and retested this support line here again, and now it looks like we're having somewhat of a bounce up there. So the dollar is not really telling me anything as of now. Let's take a quick look at the weekly. Alright, so unfortunately for me, I guess, on the weekly chart, what it does look like now is everything is on a neutral standpoint. Why do I say that? Well, right now we had this up move, and then we had this consolidation, and we had this up move again. But then what we do have, if you notice, if we just cut all this back here out, what we do have is this down move, and then now it looks like that we could potentially be bearishly consolidating. And if we bearishly consolidate long enough, we could actually break down through these two moving averages, which tells me that the market has more upside to go if this thing does break down. Now, there is a possibility, because it is in between these two moving averages, that this 20 moving average or even this 50 moving average could hold. We are going to have some support here, extra support here, that gives the potential of a bounce, but the bounce is going to be short-lived, simply because the 200 moving average is right there. So it really depends. I'm kind of in a neutral standpoint with the US dollar. Let me just see if there's anything I can do with any Fibonacci retracements. Let's take a quick look. We'll grab the high here, and we come straight down to the low here, and yeah, there's nothing really telling me anything special. So let's take a quick look at the dollar futures. So I do have some some calculated levels on the dollar futures, and I do have one here at $80 and whoops and 61 cents. On the low side, before getting a bounce, I do see some bearish consolidation here. Again, we have this down move, we consolidated, and then we have another down move, and now it just looks like we're consolidating again under these two moving averages. So unless the dollar can catch a bid, then the markets are probably going to hold up. I mean, that's what the charts are telling me. Okay, so and we do have another level here at 85.23. As you can see, we're right in the middle of the two mathematically calculated levels. So definite the market could definitely go either way. So if I draw a trend line here and maybe a potential trend line here, we're in a triangle. Whenever you're in a symmetrical triangle, the break can be either way. But when the break does happen, the break's probably going to be big. So whether the market catches a bid or sells off, it's probably going to be something more on the substantial side. But again, without the volume coming in the market, it's going to be very hard to determine. Now, the manipulation that's happening this week is due to the due to it being options expiration. So you're going to see a lot of whipsawing, especially tomorrow. Tomorrow's Wednesday. Wednesday is normally the day that they try to whip people out, whether they're long or short. So just be aware of that. Just be careful of that. The intraday could have a lot of volatility, but volume may still be under 100 million. So that's something that I would be careful about. I am still short the market. I am more bearish than I am bullish, even though most people out there are bullish the market. I mean, you got CNBC bullish the market. You got a lot of technical analysts saying they're bullish the market. I'm pretty much the only one out there, or very few of those out there that are bearish the market. Okay, so you know, take it for what it's worth. I suggest that you have your stops in place if you're short, or even if you're long, have your stops in place, because the stops will protect you. Okay, so just keep that in mind. Keep an eye on the futures. Okay, so this is the futures. Let me see if I can get some real time in here. Okay, so that's extended. So right now the futures are down only $1.25. I'm sorry, $3.25. That's not much of a big deal at all. So keep your eye on the futures right before the markets open, because the futures will tell you a lot of whether the markets are going to gap up or gap down. Again, whatever move it's going to make, it's going to be big either on the upside or to the downside. I'm going to have to be a little bit more bearish than bullish, simply because the charts are telling me that there is a bearish possibility. Again, I am a short-term trader, so I'm not looking at this long-term. Okay, long-term, I do see QE3 coming out, and then there's a possibility of inflation. So, more the longer term. If you're a longer-term trader, then being long is okay. But as a short-term trader, I do see some pullback potentially happening as soon as tomorrow, and then maybe throughout next week. But again, without that volume, and like I've been always saying, without that volume, it's going to be very hard to short. Okay, so I just wanted to let you guys know what I'm thinking. And I just wanted to let you guys know that I do appreciate all the comments that you guys send me through email and stuff like that. I really appreciate it. It really helps to continue to make these videos, because, as you know, it's not an easy thing to make these videos. But I just do want to help you guys, or if it is helping you guys, then that's my ultimate goal with these mathematical calculations. I know nobody else has it, and I know they're accurate to within pennies. So I like to put it out there for us retail traders, because again, our opponent are those manipulators, are those feds, those institutions that have billions of dollars to manipulate the market. So I want to help you guys as much as possible, and it really helps me to continue to make these videos with your appreciation and whatnot. But the reality is, I appreciate you guys coming by and stopping by to watch my videos. I mean, honestly, I get like maybe 20 views, and I have maybe 30 subscribers, and probably only half of you guys actually watch these videos. So I'm definitely not making any money on these videos either. So I do appreciate you guys stopping by and spending time to watch my videos, and liking my videos does help me to think that I am on the right track. If you guys want me to change anything, or want me to talk about something else, then shoot me an email. That's fine. I'm thinking about having questions and answers on the weekends and whatnot. So feel free to send me an email if anything. And you know what, I'm way out of time, because all you guys know I like to ramble a lot. But this is your now 23-minute market update. Thank you for watching. God bless you all, and good luck to your training, and I hope to see you